Today, you're going to get some clarity from Luke Groman, who's the publisher and editor of The Forest for the Trees. Luke, welcome back to TradeGateHub. Great to talk to you.
Great seeing you again, Dale. Happy New Year.
Yeah, so, uh, how long have we been talking and
Oh
doing
boy.
these things? What do you just take a guess?
I bet it's
Ballpark.
probably eight or 9 years, I would guess.
Okay, so that's a long time. So I want everyone just to think back to where gold was 8 years ago and where Bitcoin was 8 years ago. And Luke's subscribers are sitting, people that listened to him took him seriously. And it's hard not to take Luke seriously. Look how well positioned they are in the beginning of 2026. In fact, Luke, everyone now has embraced the debasement trade. But you were talking about it when people thought the debasement trade was a space underneath a house that they that they could fix up and then put in their screens, and that would be the basement trade.
The basement tree. I love a good dad joke, so you have no
Yeah,
idea how much I appreciate that. I love it. I
yeah.
love
So
it.
anyway, I just thought about it last night. So this is a reveal, because so I thought really that's what people thought the basement trade was. They'd be trading in their parents' basement, and where they've lived because of the economy, and they continue to because of the economy. So why don't we start off with you were mentioning in your stream that the fact that the exchanges are raising margin requirements on gold and silver has not been able to slow the advance, which became parabolic in silver and now gold. Um, so you said that basically, what does it do? It's like an admission or a powerlessness that we've ceded the precious metal market to Asia in the multipolar world. Can you expound on it?
Sure, yeah, it just really struck me. I think it was last week they
Yeah,
the CME, I think it was, raised margins pretty notably. And if I remember right, they weren't just a straight, excuse me, a straight margin hike. It was a hike of that was like a flexible amount of the face, or it was a percentage of the face. It wasn't just a flat percentage. That's what it was, or of
oh,
not notional, right? A percentage of notional.
yeah,
So, and you've been doing this a long time. I've been doing this a long time. For most of my career, up until just a couple years ago, um, when they raise margins on gold and silver into sort of frothy markets, you and I
yeah,
both know what would always come next. It was where the saying came from, right? That gold and silver took the escalator up and the elevator down,
right.
and they would raise margins and they'd take the elevator down,
Mr.
and
Slammy.
yeah, Mr. Slammy, right? He's got
Yeah,
a name, and
yeah,
so it was fascinating to me, right? Markets are always just giving you information. Prices are always just giving you information. And so
right.
they raised margins, I don't know, a month or so or 3 weeks ago, and they sort of got knocked for a second, got right back up, took back off. And then they did this one, and that's when I put that on my X feed is really I just watched it. I said, wow, like this is a regime change. They hit it hard and it just shook it off like it was, the Terminator. Like it just kept
Yeah,
going. And to me, yeah, what does it mean? I think absolutely it suggests that physical markets in Asia, etc., are setting price on the margin now. And if that's the case, it's a very powerful dynamic for gold, silver, etc.
they have one more card to play. I do recall during the silver squeeze of the Hunts that they tried raising margins and that didn't work. And then they changed the rules and they went to liquidation only. Do you think that's in the cards, Luke, that they may pull that card? And, that what for our viewers, that means, you can't buy anything you have to just liquidate. That's what the market is there for. And that kind of that was the end of the bull market in silver after, Russia invaded Afghanistan. So, uh, with this not working, could they do that? Change the rules?
I would never say never, and they've changed the rules, like that. They changed the rules like that in '08, if you remember, right? You couldn't short sell banks anymore in
Right.
whenever that
Yeah.
was.
Yeah.
Um, you know, uh, with that said, in this case, I'm always reticent to say it's different this time, but I think it's not that it's different this time. We have to go further back in history, which is to say, all of a sudden, paper silver doesn't work in
Yeah.
Tomahawk missiles. They don't work in my solar panels. They don't work in EVs. They don't, right? So this is very much a physically driven bull market for silver in particular. And then we talked about how Asia has appears to be gaining some modicum of control over gold and silver. And so number one, it's a physically driven market. But number two, in 1980, there was really no competitor, right? You had London, you had New York, but they were on the same
Right.
team.
Great
Um,
point.
and now Shanghai, Hong Kong, there is a
Yep.
world, and it is a very, very big world, who happens to be the majority of global population, the majority of global energy production, global factory base, etc. They want gold higher. They want gold to go back to its historical role as a neutral reserve asset, and it needs to be made much bigger to do that. And they are very, whatever it is, 3, 4, 5, 6 billion people on this planet understand gold to be savings. And so, the Western paper exchanges can do that. I would never say they can't do that, but I think that would be it. Then we would absolutely know pricing is set in Asia, because I think, yeah, maybe you would get a dip down. You might not even get
Yep.
a dip down that day. I don't know, but maybe you
Yep.
would. And whoever's waving it in would just wave it in Asia, and then that would be that. And then, Asia would dictate to London and New York, and that has implications for currencies, implications
Yep.
for geopolitical power, etc. So I don't ascribe a high chance of that happening, but like I said, I mean,
Yeah.
I've been doing this too long to say never.
Okay. What you just said really makes me really respect the vision that Jim Sinclair had when he started the cash and carry Shanghai exchange. He called it emancipation,
Oh,
and
wow.
it's free now. Okay, so we had a prison break, didn't we? Once we took out $50 silver, and then China said that they're going to limit exports on it. That was a jailbreak.
I think that was a jailbreak, and I think the United States government coming out in November and saying that silver is a critical mineral and we're adding it to
Right.
the list,
Yeah.
that was a huge tell. And I think going back even a little further, something as you know we've written about for a number of years. Uh, in 2018, China opened Shanghai oil
That's right.
contract. And a lot of people thought that was a nothing burger, and I was adamant it was not a nothing burger. And the reason ultimately that was the case is if you look at gold, right? Gold competes with the dollar.
Right.
But if oil is only priced in dollars globally, then when gold runs, right, there's a price of gold in dollars, there's a price of gold in Chinese yuan. When gold starts running in Chinese yuan while oil's only priced in dollars, that's telling you China's having a currency crisis. The yuan is falling against gold. Gold and oil are going to be pinned together, and so their oil bill is going to go up. They're going to have a currency crisis if gold rises in yuan more than in the dollar. Once they launch an oil contract in yuan and it gets just enough volume, it doesn't have to have a lot of volume, it just has to be functional. Um, Now all of a sudden, gold rising in yuan, while there's oil priced in yuan, is telling you gold buys you more oil in China than it does in London or in New York in dollar gold and oil contracts. And it sets up an arbitrage um, of drain the West of physical at the lower gold to oil ratio, take it to
Yeah.
Shanghai, get more oil for your gold, cover your short, and wash, rinse, repeat until either the price of gold rises in the West, or they run out of gold, declare force majeure, and then the price of gold rises a whole lot really fast. So this, I think it's still not really appreciated in Western markets because it happened so long ago, right? We are very much we like cause and effect, cause and
Yeah.
effect, cause. This was a cause 8 years ago now when they launched the Shanghai Gold Exchange or the Shanghai Oil contract in March of 2018. And it took a while to build up, et cetera, et cetera. But now that's fully running. They're buying a lot of commodities in yuan. And so for gold, and that it kind of ties back to your first question is can they go sell only on gold? They can, but all that's going to mean is gold buys physical gold buys a lot more commodities in China than it
Yeah.
does in the West. And the gold's just going to go where it can buy more. That's just capitalism.
Okay. So it's really the same playbook as they had with gold.
Yep.
It does this, and the central bank probably has their hand in those contracts as well, the PBOC.
The Shanghai Gold Exchange is a unit of the PBOC.
Yeah.
That's all you
Uh,
need to know.
yeah, and I remember, Luke, when we first started talking, oil was a very important thing to you, and we had that run to 120 on the initiation of a kinetic action in Ukraine, and the whole world's bearish. I think that we're putting in a significant bottom for a rally back to about 78, back to the highs that we hit after we took out the nuclear reactors in Iran. Um, so I think a lot of people are flat-footed. And oil compared to everything, copper, gold, historically, all commodities, that ratio is historically low. Do you like oil from these levels, and what do you think? Um, that are we going to have? A lot of people are bearish because of Venezuela. Um, I know people that the fundamentals, the supply is, they believe the supply is overstated, and that there's not as much oil around as the market is pricing in right now. Do you have a view?
My view has been and still continues to be, I think gold is going, or excuse me, I think oil is going to, I think it's going to stay range bound. In other words, I think you get much below 60, and we're already seeing marginal sources of supply, in the U.S. coming off. Harold Hamm last week talked about,
Yeah,
anything in the Bakken's not really economic at 59 or 58, wherever it was that day. Um, And I think, below 60, the biggest marginal supplier in recent years, the US starts to become economic. Above 85, the US Treasury market, JGB markets start
yeah,
to have problems. And so I think oil stays 65 to 80. And the
yeah,
release valve ultimately becomes gold more secularly. I think we're moving to this multipolar system. If by no other definition, then you've got oil and gold contracts in China and you in their currency and oil and gold contracts in the West in dollars. That's multipolar or bipolar at a very basic definition. And if that's the case, then you can I think ultimately the release valve for the system is going to be the price of gold. In other
okay,
words, the gold to oil ratio will continue rising secularly over time, and oil will be kept high enough that it keeps marginal supplies on and producers can make some money, above 60,
yeah,
um, and low enough that it doesn't blow up the bond market until at least gold gets high enough that policymakers can do some things with, revaluing gold, recapitalize their balance sheet, buy down debt. That's a separate discussion. But I think for the sort of immediate future, I think there's some interesting trades in there, right? 60 to 75 is a nice little move in
yeah.
in in oil. And that's something I could absolutely see happening. I don't have a strong view on that right at this moment. Gun to my head, yeah, I could totally see that. 60 to 70, 60 to 75. Totally see that because I agree sentiment is terrible. No one's there. Um, Structurally, I think gold to oil ratio keeps rising,
Okay.
over time for the reasons we discussed. But yeah, I could absolutely see that in oil.
And also, that meeting President Trump had with all the major oil companies, there were a lot of dissents and unwillingness to take the risk to go back into Venezuela. But they had their meeting at $58 crude. So if there, is any kind of conflict in Iran, and this has been one of Trump's affordability victories, has been keeping energy prices low, but perhaps to motivate oil executives at the majors to go in and spend money in Venezuela, they might be more willing to do it at $80 than down here. I think that's a possibility that for a while, the president wouldn't mind seeing higher oil prices for the oil patch, which is complaining they don't have margins. What do you think?
Yeah, I mean, I could see that. I could see even, up to 80.
Yeah,
You're still below that. Now, I would say what's happening in bonds right now makes that trickier, right? Whether it's JGB, 10-year treasury yields, et cetera. The more those go up, the more, in my opinion, being able to take oil up to 80, is going to be tougher to do, right? Because now, all else equal, when oil goes up, bonds don't, you can look at a 10-year yield against the oil, all else equal, last couple, 3 years, they move together in the same direction at least. And so that would be, I think, the governor in the very near term to that to me is, hey, are we, they may have missed a window to do that on some level, when 10-year was back at, wherever it was late last year, 4%, just under 4%. Now we're getting up to 4.3. Oof,
yeah,
it gets a little trickier.
yeah. I wanted to shift gears and talk about Japan and what's happening over there. And one of the major reasons is, it's a very important currency in the carry trade, as is the dollar. And I'm interested in your view with what's happening with yields. Already has made the carry trade more expensive. The only thing that's bailed it out has been a cheaper yen. Um, if we, do you have any concern about the yen reversing maybe some intervention if they get back up towards 159, 160, and it's coordinated with the US that they come in and turn the yen? And that success of stopping the yen's decline the result will be pressure on the carry trade because it already has the interest rate pressure. Then, if the currency starts to appreciate, that trade unwinds. Do you see that as a possibility? Maybe sometime in 26?
Yeah, you could see something like that. To me, I think the JGB market and what we're seeing, and in particular, what is happening to JGB yields, how fast they are
Yeah,
rising, and with the context that the currency is not responding, the currency is
right.
weakening, I think is by far the biggest story in markets, uh, probably right now.
It's an emerging market reaction, higher rates, lower
100%,
currency.
100%, 100%, and that is. I think Robin Brooks, who with the IIF, said it best on X a day or two ago. He said Japan is the G10 country that is closest to a debt crisis, and a Japanese debt crisis. I mean, even with yesterday in the markets, as red as that was, yesterday hasn't begun to discount what happens if Japan has a debt crisis. And I think it's closer than people think, and I think in part because of the geopolitical moves, whether it's, us going to Venezuela, whether it's us going to Iran, whether it's us, we may have attempted to assassinate Putin at the end of December. The CIA said we didn't, the Russians said you did. He said,
Hmm,
she said, truth is probably somewhere in between. But point being is if I was going to retaliate as China or as Russia, I would hit the Japanese bond market. You hit that market, Treasury market will follow, as we've
right.
seen in the last couple days. And then what? We know
Yeah.
what comes next. They have to print. So I'm very, very concerned about what I'm seeing there. And then you get into your question of, okay, well, can they intervene? And it's a little bit of a problem because we saw in summer of 2024, too strong a yen blows everything up. Too
Right.
weak a yen blows everything up. Too strong a dollar blows
Yeah.
everything up in the bond market. And I think that's probably part of one of the messages of gold is a recognition that we've kicked the can as far as we can. We can intervene in the end, but that means we're going to set fire to the too strong a dollar side of the problem in
Right.
relatively short order. Or if we don't intervene in the end, then we're also going to set fire to it. And so you look at it and go, okay, well, option A gold wins, option B gold wins, and option A markets lose, option B markets lose.
Yeah.
Okay, I know what to do with that. And that's the price action we're seeing on our screens
We are.
as we're sitting here. And so I have been saying I'm surprised how complacent markets are about what's been happening with this emerging market price action in Japan. Um, Yesterday did nothing to dissuade me of that. I think
Yeah.
yesterday was a tiny down payment on the way this could go. Because like I said, it's not as simple as it was in the past of, hey, well, let's just intervene in the yen by strengthening the dollar. It's not really an option. And letting it continue is not really an option either. So, hey, let's see what happens. But to me, I just look in the very near term and go, oof,
Yeah.
people are still way, way too complacent. I mean, the move bond volatility index was up like 25% yesterday alone, but it was up 25% yesterday to like 70.
Yeah.
They haven't intervened in the past to like 130 on the move index.
Right.
Now, it
Because
could get there fast, but that's a
yeah,
lot of pain between here and
yeah,
there.
it was at an extreme low, just like the VIX. Both the
Yep, the
move
VIX.
and the VIX,
Yes,
they're
credit spread,
married.
same thing.
They're
Yeah, credit
married, right?
spreads. Yep,
Yeah,
same
and
thing.
oh yeah, when someone taught me when and regarding credit spreads, when people say it can't get any better than this, believe them. Right? And I mean, credit spreads have been the tightest they've been in such a long time. There is no risk priced into credit spreads. Are you worried about the shadow banking system and some of the cockroaches that have already defaulted and how opaque it is, and that the commercial banks are the ones that, since they can't do the business, they put up the money for the private banking sector to do it. Is that a something time bomb out there?
I don't know. I've been doing this 30 years, so you and I both know that the system is levered, and every cycle we sort of, someone throws a grenade into the water and it
Yeah,
blows up, and then it takes a little bit, and the fish start floating up, and sometimes some whales start floating up, right? So
yeah,
the thing I think that is people aren't grasping yet or are too complacent about is the grenade this time is the sovereign debt market, and in particular, the Western sovereign debt market. Like you talk to an EM investor and you show them the Japanese, the JGB chart and the yen chart, and they go, "Oh my God, ugh!" Like I've
yeah,
seen this before over and over. But this is Japan, and
yeah.
Japan's their bond market's intimately tied to the treasury market, and so and oh, by the way, the gilt market's probably not far behind. So you have the Anglo-American Western powers, and their bond markets are the grenade this time. So I don't know if where there may be bodies. I just know that it's a leveraged system, and the bottom Jenga block, the underpinning asset, the sovereign risk-free asset,
Yeah.
is the problem. And so I don't know how the Jenga blocks would fall, but it's hard to be optimistic on risk, and I would never say I'm sure there's no problems. There's problems somewhere. I just don't know where they are. But when your fundamental collateral asset is the grenade, again, that's why we're seeing gold do it soon, because gold is nobody's counterparty.
And in the 8 years I've known you, you've warned people about being in bonds. And okay, let's go back 8 years. Pretty big bear market. No recovery. And
No recovery.
maybe we need this capitulation and new lows. What do you think?
I think to me, I think long bonds are kind of just going to be blood sport. That's a term from one of my closest relationships on the street. Like if you want to get down there and sort of, as it's, marinating in the volume, right?
Yeah,
It's a friend of mine used to say, if you want to go in there and like, beat the heck out of each other, trading that, down there, great. But that, to me, the real story is if you take that chart and you divide it by gold. That to
yeah,
me is where all the action is. And if you put
yeah,
TLT divided by GLD, what is happening is so, so clear. And it's a
yeah.
straight line down into the right, heading towards zero. And so to me, I think bonds are going to zero against gold.
Okay.
And I mean, look, they're already, they're down 90% against gold over the last 10 years. I think they're going
Yeah,
to finish the journey, but I think they're going to finish the journey with the 10-year. I mean, look, if Reader comes in and, they do some sort of yield curve control, whatever, could the 10-year go to 3.5%? Sure. Could it go to three? Sure. And that's going to be a nice little trade here. Um, but gold's going to be 10,000, right?
yeah,
And
yeah.
so for me, I do agree with a view that, hey, TLT is bottoming. I don't, I'm not of, I've never been of the view that yields are going to be allowed to run away nominally.
You
You
used to
know,
talk about negative rates,
yeah, negative real
real
rates for
rates.
sure.
Yeah. Um, you
And
know,
that's what
I
gold, that's what the gold is telling you.
all right. So why don't we wrap it with what you're looking for after Powell is no longer the chairman, and you did tweet about that, especially how all the global central bankers came to Powell's defense. You said you've never seen that kind of support or unity for a person since Fauci. So, I don't know if you want, I don't know if you want to explain that or not, but
Yeah.
what do you think the new Fed is going to be like, and should we worry about the Fed being controlled by um, the head of an administration like Erdogan in Turkey, who directed monetary policy, and that's why they're suffering in the streets in Turkey, is because he really is not a central banker, he's a politician. Do we have to worry about that?
Yes. Yes, we do. And I think it's important to attribute blame where blame should be attributed, which is if we, I think it's a Chinese saying, or basically, if you don't want to end up, if you get onto a path towards a destination, don't be surprised when you arrive there. Um, if they didn't want to end up here, they shouldn't have gone to Iraq on a lie. They shouldn't have gone to Afghanistan for 20 years. They shouldn't have bailed out the banks the way they did. They shouldn't have printed the money they did. They shouldn't have been in Syria. They shouldn't have been, all
Yeah,
of these things we've been involved with, they should have reformed entitlements. Like 70 million boomers were born from 46 to 64. Any idiot with a sixth grade education and a calculator and an actuarial table knew that entitlements were going to blow up like starting about 5 years ago. And yet they did nothing. They had no political courage, even though that generation is the wealthiest generation in the history of mankind on average, on average. And so you didn't do any of those things right. And what you win for that, the booby prize, is you're going one
a
of two
debt
choices.
crisis. Yeah,
You have two choices, right? Either the Fed can, look, if the Fed remains independent, the Fed is going to be dictating foreign policy, defense policy, and domestic economic policy because they're going to raise rates. And if they want to stop the deficits, then interest expense is going to crowd out defense and entitlements. Boomers are going to have to get cut. Defense is going to have to get cut. Foreign aid is going to have to get cut. So now the Fed is dictating the foreign and domestic economic policies of the United States government. That's unsavory option number one, because Powell doesn't know anything about any of that.
okay.
The opposite side is what you just described, which is, Erdogan or Trump or Biden or whoever ends up in that seat marries, like we did in World War II, the Fed and Treasury are married for some time, and the currency gets whacked and inflation goes nuts. Bond market gets killed on a real basis. And, we inflate the debt away for some period of time and hopefully it can all work out because a lot of times you sort of never emerge from those situations. So I look at it as agnostically as I can, which is, who's to blame? We're all to blame. Like we all loved our mortgage deductions, we probably
Yeah.
didn't need. We all loved, we've lived high on the hog and we did stupid things in terms of domestic and foreign policy for 50 years. And, the devil's here and he's here to take the hindmost. And so our choice now is, do we want the Fed to control foreign and economic policy, or do we want the government to control Fed policy?
Everyone, and I know you believe in this as well, Luke, that we're in this fourth turning.
Yep.
And, and I think it's very important, probably more than ever before, for people to have reasonable voices as chaos continues to escalate financially, geopolitically, domestically. And you really shouldn't try and navigate this without hearing what Luke has to say, not just me interviewing him. Every 3 months, he has a great YouTube channel. You could also, sign up for a free letter where he highlights his best tweets. I'm saying this: Luke is a watchman, and you can't benefit from a watchman unless you listen. So, I believe that he should be part of your intelligence gathering here. And Luke, you know, great way to start the year. We're going to have a lot of history making markets this year, and I'm looking forward to trading them.
Yeah, I think it's going to be a lot of fun. I think it's going to be a lot of fun. I think it'll be times we, pace
Yeah,
ourselves because I think we've just gotten a glimpse of the pace of things here. It's what, January 21? I mean, we've had
yeah.
like 9 months worth of events in the first 3 weeks of the
And
year.
the debasement trade may mean we have to hide out in
I hope you're
hide,
wrong, but
hide out in
I,
our basements with our freeze-dried food and ammo and everything like that. Luke, great to talk to you again, and I had a great time, exchanging ideas with you. Uh, really appreciate the relationship we've built over the years and wish you all the success. I hope that from the forest to the trees expands like a mushroom in 2026 for you.
I appreciate that. Thank you very much, Dale. I treasure our friendship.
Luke Roman, everyone, don't walk around in the financial mess without him. And you can see the video will be out in about 5 minutes. Follow Luke at the minimum at Luke Roman on X and keep in touch. We didn't even have a chance to talk about Bitcoin. But quickly, Luke, it's been under pressure. I think we're about 10 grand away from where I'm going to be interested in from a technical view of trying longs. What do you think? Around 70K?
Yeah, I could see that. I would say 60, 70. It starts to get interesting technically.
Yeah,
I think I'll want to evaluate what's happening with events, right? Because the
yeah,
one thing that has you've had positioning that's been unwound to some degree. We sold most of our Bitcoin up near 94 to 96. And that was just simply on a number of different factors, but also a long-term sharp breakdown on various momentum indicators.
yeah.
And so for me, it is, if nothing else changes, yeah, for me, 60, 70, I would start to look to go back. The thing I would be watching for is if we have some sort of market events where you're having forced degrossing of treasury companies, things like that, sort of if you remember in late 22 when FTX blew up,
Yeah.
you had sort of forced unwind of sort of everything crypto, but Bitcoin suffered within that. And so I want to see kind of what, it would be get there, reevaluate, get to 60, 70, reevaluate, and then let's see. But yeah, I could see that it's set par. Yeah, I could see that those levels. Yeah.
Okay, maybe we have this 10-15% correction in S&Ps, and this is the last wave down uh, in Bitcoin during this correction, and it should be on the shopping list of things that are getting liquidated during the break in the market, is my view.
Yeah, I think that's right. I think Bitcoin for me, for it's been 5, 6 years been saying it's the last functioning smoke alarm. It's basically the equity tranche, right? So
Right.
when there's plenty of liquidity, it's going up, and when liquidity gets withdrawn, it goes down first and hardest.
Yeah, it's been signaling the top while we've been distributing in NASDAQ since October.
Yeah.
And now NASDAQ's starting to break down. So we get this washout in the Mag 7, NVIDIA, and it's the last leg for Bitcoin. And because I still think the market will make new highs after this pullback. But
Yeah,
it
I
could
think
be
they'll have to come. Yeah.
ugly. Yeah.
Yeah.
Anyway, thanks for sticking around an extra 5, Luke.
Of course, my friend. We'll talk to
All
you
right.
soon.
All right. Have a
Bye-bye.
great one, buddy.
You too. Bye-bye.
Luke Roman, everyone. Check him out.